Welcome to Breaking Banks. Welcome back to Breaking Banks. This week, joining me in the co-host chair is our regular contributor, Forbes senior contributor, and the snark extraordinaire, Ron Shevlin. Welcome back, Ron.
Hey, Brett. Thanks for having me.
On that point, if you haven't, make sure you check out Ron's Forbes article. He is getting a strong reputation in respect to the content he's delivering there. Lots of valuable content. We also have guest Johanna Pugh joining us. Johanna is a known figure in the fintech space. She's managing director for North America arm of Mambu, and she brings with her extensive experience in product management, software development, implementation services, compliance, business process reengineering, etc. It's great to have you, Johanna.
Thank you. Happy to be here.
Yeah. So first of all, I do want to cover this off. I know this is going to air, at a different date, but as we record this, the news has just broken that Simple is winding down. And I thought, out of respect for my good mates, Josh Henrichs and Shevlin, that we could just say a few words about their, what do you guys think? What contribution do you think Simple has made to fintech and banking, particularly in the United States over the last decade or so? What do you guys think?
I'll let you start it off, Ron.
Sure. So, I kind of see Simple as the sort of like who was the first spreadsheet in the market before Lotus 123. So whoever they were, sort of, Simple was kind of that to the neobank world, and then Chime came along and 8 million customers became the Lotus 123. And I'm sure this makes no sense to anybody under the age of 40, right? Because they don't remember any of this stuff. But I mean, I don't mean that in a negative way. I really kind of mean it positive. I think, really, Brett, it was you and Movin' and Simple almost about the same time that kind of created and legitimized the neobank / challenger bank concept and opportunity. I think at that time, nobody believed that a non-bank could be a bank. Yeah. And I think to the credit to you and Josh and Shamir, you kind of changed everybody's thinking on that.
Made it possible. And it was VisiCalc was the predecessor to Lotus 123. Yeah. Thank goodness for Google.
Yeah, and just to kind of tag along to that, Ron and Brett, I think one of the key things that Simple did is not only did it bring to, thought evocation that it actually could be done in non-banks, but it also brought to stage a level and a layer of game changing. So it set the bar a little bit different from a competition, from a productization perspective. And it made organizations think differently about how they want to deliver those services. And I think that's one of the biggest things. And if you kind of mirror, Simple in the US markets, and you mirror open banking in some of the European markets, it's created this, catalyst for co-opetition and competition. And financial institutions are having to up their game to compete with some of these guys. So I think it's bringing together a really good formula for successful financial institutions.
Not to mention that Josh and I are both Aussies. So anyway, there's a few Aussies in the the fintech space. Peter Hazelhurst and others as well. So anyway,
Dom started one of the mobile banking companies. I think he's back in Australia doing other stuff. But yeah, you're absolutely right.
Yeah. So anyway, let's get to Mambu. Johanna, first of all, why don't you start by just telling us who Mambo is, how you guys came to be, what's your mission,
and what the hell is a Mambu anyway?
What is a Mambu?
Yeah, so I was about to start off.
Is it like a dance that was invented in the Caribbean, or?
No. It's Mambu, not Mombo.
Mambu.
So Mambu is Indonesian for bamboo, and so to grow and be prolific, right? And to be sustainable. And so one of the key things, and the reason Mambu was created, other than the fact that it was a collaboration for a thesis project 10 years ago was to create something that could be sustainable, something that could be prolific in technology from a digital age perspective and cloud forward. So those were key things for Mambu and why it was created initially, and it's evolved quite considerably. It was just a European company, and we were highly focused in Europe and highly focused on, you know, those folks who wanted to either do something from a fintech perspective, a neobank perspective, and it's quite significantly evolved over the last 10 years. We just had our 10-year anniversary.
Congrats.
And so during that anniversary, you know, if you take a look back, you know, 4 years ago, we chartered into the Latin American market. Edgardo and team down there have done a fantastic job, and there's an evolution there. These government banks are being, they want to do something different. They have their own version of our PPP loans that they want to extend to their you know, the residents in the countries, and so that's quite a significant opportunity for us that we've kind of ventured into. And then, you know, at the same time, we went into the Asia Pacific market, and so with technology that allows a financial institution to extend what they do today, Mambu wants to, and our entire mission and the passion we wake up for is to provide the latest, greatest technology to the financial institutions so that they can use it to be better in offering their services to their customers and their customers' customers. You
talk about composable banking. What is that? Sorry, Ron, I stole your thunder a bit there asking the question.
No, go right ahead.
No, I mean, composable banking, you know, it's a kind of a term, a catchphrase term, but what it means to us is having the ability to kind of plug in a headless core into an operation, either as a subledger or as a core banking, you know, faucet, to be able to extend the way a bank wants to do things and not have to do it with, you know, the entire, you know, stack of what Mambu has, right? And so it gives you the ability to plug something in and not have to stay on it for 15 years or 20 years to get your value out of it, right? It's a software as a service accessible to institutions. And what we found, you know, as its composability is, you know, in North America, it's kind of been a little bit tough, right? Because Fiserv, Jack Henry, and FIS, they've kind of come at us with, okay, here's the whole cake. It's already iced for you. You don't get to pick whether it's strawberry, vanilla, or chocolate. And the rest
70% of the banks in the US use a platform like that. They don't run their own IT stack. Yeah.
Exactly. In the rest of the world, what has transgressed because of open banking and because of fintechs and because of a lot of these new neo and digital banks popping up is something they want to leapfrog above what they've got, right? So they've got all this tech debt and they want to move it to the next level. Well, for them, they don't want everything they always had. Let's go get the best of breed, or let's go plug this in. And if we don't like it, we can change it out and put this in, right? But I need a core. I need something to harness the power of everything we're going to pull in. And for us, we're looking to take that to North America in a number of different scenarios. So one is, you know, hey, do you want to replace your core? Which not a lot of banks and financial institutions want to, but there are a lot that need to. And so how do we extend it, right? And so how do we layer on top of that? Or, you know, from a challenger bank perspective, how do we take off real quick and put a new technology stack together that makes sense, like for Santander's Asto or ABN AMRO's New 10, or for these new crypto banks that are coming out. You know, how do we extend what we have today to be able to offer, you know, accounts and loans to those organizations, right? I need a good base for that. And then we plug in the things that we want. So that's what composable means to us.
You know, I wouldn't, I'm not looking to argue with you, but I would actually tell you, Joanna, I think a lot of banks and credit unions here do want to replace their core. The problem is it's a huge commitment of time where all innovation stops. And so, you know, I think they're looking for some alternatives. But, you know, I wanted to just throw out a couple of things. Every year I do a survey called What's Going On in Banking, and the results from this year's survey is in, and I'm still amazed to find that among the mid-sized institutions, 60% still say they've got no kind of cloud computing, 50% of the credit unions. So there seems to me, maybe is there a chicken and egg problem here? Do they have to be doing things in the cloud before they can start doing things with Mambu, or is Mambu a way for them to get into the cloud?
No, it's absolutely, yeah, great question, Ron. It's definitely an opportunity for them to get into the cloud. We prepackage our stuff with Amazon, with Google, with Microsoft, and give them the ability to take that journey if they want to.
Yeah, great.
Cool. So let's talk a little bit about the market that you're trying to address. It's not just sort of just core banking, but also innovative ways of lending. We've got a lot of Americans affected by the pandemic. They need access. They haven't had access to stimulus funds throughout this, like other economies where they did regular payments, UK, Germany, Australia, etc. And so, they've been relying on credit to sort of get through the tough times. So, how do you think that's going to change the way we position lending in America over the next few years as people sort of try to recover financially from the effects of the pandemic? And what's Mambu's role in that?
Yeah, so I think two things that the pandemic has really proffered for the financial services sector is one, a need to be agile and innovative, right? And so when the PPP loan package came out, whether it be RegTech, Fintech, whatever the aspect of it was, the institutions needed to be able to sway really quickly. And, folks that were on our Gen 3 technology. So if you think of Gen 1, the Hogans, the guys have been out there for, 50 years. Gen 2, maybe,
I used to work on Hogan, by the way.
Yeah, no, me too. So Gen 1.5 and 2, you're kind of thinking about the OSI kind of proposition there that's now part of Fiserv. And then even, aspects of Temenos into Gen 2. And then you think Gen 3. And this is something, fully cloud forward, fully SaaS, that sort of thing. And those who are on an API extensible, and I'm not just talking about integration APIs, I'm talking about fully extensible APIs, were able to make changes within hours to create those products from a technology perspective, and they didn't miss a beat. It's the institutions who didn't have the ability to quickly run with the new things. They had to wait on a release, or they had to wait on a service pack or what have you, and then run that through their normal process.
Just even releasing PPP funds as an example.
Absolutely, unequivocally. And so I think that the financial institutions started thinking about things like, hey, maybe we need to get more innovative with the way we can deploy products. What if something else were to happen, right? So that's the first thing. The second thing that's happened, I think, because of post-COVID, is financial institutions are now looking at, hey, it's about the customer now. They may not walk into my branch anymore. They may not come to my store anymore. They may not, want to pick up the phone anymore. How can I chat with them? How can I have a digital experience with them? How can I progress that customer experience? Because it's not just about the old school way of doing things, which is not a bad way. I still like to pick up the phone sometimes, but it's also about the accessibility. And we all know that everything is as mobile as the phone can make it, right?
So on that point, I want to get specific about that because we've seen particularly over Christmas and New Year's, we've seen an explosion in this buy now, pay later stuff. If you look at the Affirm, a pre-IPO documentation, the Peloton boom was huge for them in terms of driving, the lending options on that. But a lot of that is contextual lending. So it's, here we are, you're at Peloton, you're doing a buy, you're buying this experience, and embedded in that is this very simple way to include to lending for that, rather than having to go the normal route of applying for a credit card, waiting to see whether you got it, waiting for the plastic to be delivered, and then having to put those that 16-digit code in. Now, Ron, I know you've written about this a lot, but it seems to me like we are seeing a lot of that contextualization of lending and banking products. Just as we've seen with the debit card moving to wallets in much of the world, right?
I'm an Apple Card gal.
Right. And so I'm really interested in, do you think American banks are starting to feel that pressure right now to deliver the utility of the bank in more contextual, real-time ways that aren't where their current core doesn't afford them that flexibility, where they have to start at an application form and finish with a delivered physical product in the mail, as an example?
I'll chime in if you want, or Ron, you could go first.
Oh, that was for you. Go ahead, Jan.
For me, okay.
And then I'll get Ron's comment, but go ahead.
I love it. Yeah. So no, for me, you're absolutely right. I mean, for me personally, I don't get out, and if I do, it's a drive-through, and I want to be able to have a touch point to it, or else to me, it's not safe right now. And that's, I live in Tarrant County in Dallas Fort Worth area, and there are thousands of people every day that are going. We have 7 ICU units left, right? And so everybody's a little conservative about the way they approach, getting out and doing things. And so I think unequivocally the contextual aspect of it is definitely give me the accessibility. Ship me my Peloton. What are you going to do? Come repo it? We'll figure this out together, right? Yeah. And it's the softer side of looking at things, because it's buying based on not the consensus that I need this $1,000 or what have you, but I'm buying into the like you said, the Peloton experience or the Apple Card experience. I helped work on getting the Apple Card there, so that's why I was an Apple Card girl. But I mean, it serves my purpose like nobody's business today.
Yeah, absolutely. Ron, what do you think?
I think you're.
I mean, we've talked about this, but
what's that?
We've talked about this a few times, but go ahead.
Yeah, I think I think Johanna is spot on. It's really a reflection of a lot of consumer behavior and desire that, two things. One is I want what I want and I want it now. I sure as hell don't want to wait for it. But there is a better side to the coin, and this better side to the coin is that consumers want more control over the cash flow. They want to feel like I've got some control over this. And yes, I want this $1,700 or whatever it costs to buy a Peloton. I have a cheapo $300 one in the basement, and I watch YouTube videos on the TV in front of it. So I've got my simulated Peloton experience, and I don't have to suffer the consequences of embarrassment because I'd always be in last place in all of those competitions. But seriously, it's a desire on the part of consumers to have better control over their cash flow, with the advantage of not running up the interest on it. Mm-hmm. And so it's really to a large extent, it's really a failure of the existing players to really not understand that desire and not provide the capabilities. Because you think about it, I think it was Chase a year ago or so came out and said, oh, people want this? Oh, okay, we'll give you a chance to take a purchase and spread it out over time. And it's like too little, too late.
Yeah, yeah, absolutely. So talk to me about your collaboration with other fintechs as well, because I understand that's part of the sort of platformification approach you use, which is one of Ron's favorite words, by the way, when it comes to banking. But talk to me about how you collaborate with other fintechs.
Yeah, so I probably spend 80% of my time every day having conversations with other fintechs or partners that fill out that marketplace or that ecosystem that a financial institution would want, whether they're a non-bank lender or deposits or e-wallets, or whether they're in a credit union or a banking space, and they're looking to do something different. It's all going to be different. But the way we looked at things in the past has been very reactionary, right? So our customer would come in and say, hey, we really love your core. Talk to us about the different composable components you have already, and then what we could bring on board afterwards. And so as a consequence of that, we've built out many different integrations or connectors, if you will, to all these different fintechs. And so whether we're talking to Volante for payments or cloud currency for FX transactions, or Encino for originations for SME or consumer loans. It's about building that embedded process, and then us taking that to an evolutionary process with the customer and building out that ecosystem for them. But it's a little different than going to a big box, top 70% of the bank's provider and say, I'm getting everything I want, right? Everything you've got. So it's being able to put I want chocolate icing, and I want it to be vanilla flavored, and I want it to be cut on the the diagonal and not the this way. That's giving the financial institutions the ability to create what's best for their customer, and not necessarily base what they're going to give to their customer based on technology. So it's a little bit different thought process that they're taking these days.
So Johanna, to follow up on that, from a bank perspective, what kind of relationship do they have to have with Mambu to be able to enable that kind of capability? In other words, do they need the whole package of Mambu, or can they say, okay, I don't have, the Mambu core, I don't have these other pieces, but I just want this fintech plugin piece?
Yeah, so I mean, it's a combination of those. So yeah, so we're talking to some larger institutions where that's all they want, is they want that layering and a sub ledger that rests on top, that communicates back and forth with a Hogan, or a system that's been out there for a while that they can't extend to the fintech community. So it's that. It's also plugging into a fintech ecosystem that's already there, like an eBankit or etc., and just plugging in with them, and then creating that banking as a service. We work with a lot of our different partners, from AWS to Salesforce to Volante, all of those guys, to create that ecosystem. In some instances, we're reselling it to them as one package, either through AWS or others. In other situations, we're going and we're bringing in the marketplace vendors that they require, and they get to select what they want. So
yeah, I think this is like a big leading trend for the next couple of years. We've seen a lot of the bank as a service providers that have sort of provided, provided the services to the fintechs or big tech to be a bank. This kind of flips the model on the head a little bit and says, okay, banks, you need to tie into all these fintechs. And it's funny, the average mid-sized bank's got on average, two full-time equivalent people working on fintech partnerships. That's identifying, selecting, negotiating, vetting, deploying, and scaling. Two people. How much can you get done? They need a lot of help. And I think this is creating the new sort of fintech as a service capability. That's the flip side of the banking as a service capability.
I can tell you, as a fintech, going through that process with banks, where you have top-down influence saying we got to partner with these fintechs, but then operationally, like the guy you deal with that is operationally executing on that tends to be like, 6 layers down from the XCOM, and suddenly, how do you actually get this done? Then you've got to negotiate with procurement and with the IT department and the CDO's department and all these different people to get this to happen. So wherever you can make that easier.
Well, and I'll tell you this. So one of the things I saw in Europe, quite significantly, you saw the burst of all these incubation centers, right? So you had all of these guys bringing in, a team of folks, and the way they were successful with it, and I would say they've been relatively successful with the Revoluts and others overseas. They took a different stance in the way they do business. So ABN AMRO New 10, for instance, they didn't take all this tech debt and they created an incubation center. And so they brought in these fintechs, and they brought them in under a different process than they had ever done before. They knocked out all of the different things that were brick stopping them from being able to moving forward. And they took a different spin on it, a more agile ideation type spin. And those are the ones who were very successful in adopting and adapting to the new technology needed out there. And I'm going to tell you, as somebody who took a month to open a checking account when I lived overseas in London in one of the large banks there, it was really bad. Today, I can tell you that they have made leapfrogging opportunities happen because of open banking and extensible APIs.
Let's talk about that. I mean, let's talk about the global nature of sort of this fintech development and how it's changed. We have, obviously, we're talking a lot about Jack Ma at the moment and Ant and what's happening there in China. But certainly, you've seen both in China and, in the UK market with a strong regulatory support for fintech. We've seen a ton of innovation come out of those markets. And while the likes of Simple and Movin were first movers in the US, the regulatory environment made it much, much more difficult to, have the sort of growth that you've seen, in those markets. So given the global nature of fintech, and the fact you're operating globally, how do you think that sort of the fintech ecosystem as a whole is changing banking globally?
Yeah, so I think those who have a global outlook will go to the top, right? And so what we see here in North America, and I'll relate the two, right? So what we see here in North America is not a chasm where everybody says, oh, open banking, it's coming to us, we've got to get ready for it, right? What we're seeing is that regulation in Europe and in the other areas over there, it forced them to really adopt and adapt and be more competitive and leapfrog above things. I think that's happened in Europe. I think what you see over in China and Japan is just the maturity of the underbanked in those arenas, looking to access, financial services and products, and this is the quickest way to do it. And so they need technology that can ebb and flow with them, and they're very experimentational anyway over in those particular arenas. So I think, and you also see the formation of countries. So you see countries like Indonesia, Malaysia, Myanmar, those guys starting to really kind of stack the plates. But in North America, I think the chasm for us is, hey, what if we want to do something outside of the US? What if we want to go to Canada and open up the same type of product? If we want to go down to Latin America or Bermuda or other different areas, we want something that's going to give us that global perimeter to be able to grow our business the way we want to. Every customer we sign up today, every one of them has a year 2 or year 3 plan to go into other markets, right? And then conversely, we have some of our European and Asia Pacific customers, their next step is to move into the North American market. So they can't do that if you're just US based. You got to be able to look at standards across all the ways.
And on the whole fintech and unbanked thing, this is one of my new sayings. Don't bank the unbanked, fintech the unbanked. Right? There you go.
There
you go.
So Brett, I saw that post on LinkedIn today, and I'll take you back 7 or 8 years because I've got some consumer data I got to check out, because my theory is what the fintechs are doing are banking those who debanked.
Yes.
These are the folks, they're not unbanked and they're not underbanked. They are debanking. They are saying,
I want a better system.
I want better. I'll give you a quick, I did 3 consumer surveys last year, 2020, January, August, and actually 4, whatever it was, January, October, and December. So I've got a good view of what happened in the course of 2020. And the challenger banks, in terms of their market share, in terms of the percentage of consumers in the US who consider a challenger bank their primary bank, grew from 3.6% to 10.6%. And now that's not huge numbers, but as a growth perspective, and that doesn't even count the market share they've got of second and third accounts. And it's from a millennial perspective, they went from 5% to 15%. The banks in this country, and to the credit unions too, they're just not having a full picture of what's really going on in the consumer perspective. And to Johanna's point, really don't get the whole international piece. If you give me 30 seconds, give me a quick story. Right? Revolut, Chris Gledhill in the UK, he had tweeted a while back that. Hey, look, Revolut was going for a banking license in California and questioned why they would do it in California. So I joked, well, maybe that's because the one guy in my survey who said he had Revolut as an account lives in California. And a bank executive from a $35 billion bank in Wisconsin, which I hope doesn't give it away, she responded, she goes, I have a Revolut account. And so I joked,
are you in California?
And I joked, I said, so does your boss know that you're banking with a bank that's not your bank? And she said, it's my secondary account. I use it for international money transfer. And see, that's the point, is like, there's one thing that they do really well, and people open up the account to do it. Had a guy talking to a guy yesterday who was doing some stuff around payments and trying to bring the buy now, pay later to the physical store. And one of the stores he's got is a fashion store. I'm like, well, how are you going to grow from that? He goes, hey, most of their business are Chinese tourists trying to use Alipay.
Yeah,
exactly.
So, the banks are just really missing the picture on what's really going on from the consumer perspective.
So listen, we're running out of time, Johanna, but I do want to ask you one question. 2021, it started off with a bang. Literally. But can I ask you, what are your plans for 2021? What do you hope Mambu to accomplish this year?
Yeah, so we plan to grow and proliferate in North America. And the way we plan to do that is 100% partner forward, 100% cloud forward, and 100% with some of the best talent out there in the market. So we're growing our team considerably in North America. We're growing our footprint with our client base. The majority of that will be in our sweet spot, which are the non-bank financial institutions, but we also have some integral partnerships that we'll work on with the top 10, top 20 banks to really foster and wrap around those. And then we'll continue to proffer with, those ecosystem partner plays with the partners, like I mentioned before, AWS, Salesforce, et cetera, to create an ecosystem that would fit a specific market segment so that the financial institutions don't have to work hard to figure out what could the art of the possible be. So that's us in a nutshell. And we plan to do it with a smile.
Awesome.
And grace.
And where can people find out more about Mambu?
Yeah, so find out about Mambu, go to our website. That's one pretty easy way, but feel free to hit me up on LinkedIn or anybody on the Mambu team. And we'll be more than happy to get you the right spot and get you talking to the right folks. Whether you're a partner, whether you're fintech, or whether you're somebody who's looking to make some sort of transformation or platformification, to use Ron's favorite word.
Yeah, awesome.
Excellent.
Well, thanks for joining us today.
Perfect. Thank you guys for having us.
All right, we're going to take a quick break, and we will be right back.
Welcome to Breaking Banks, the #1 global fintech podcast and radio show globally. We are very happy to have you back, and we're going to get totally crypto on your butts this episode. Joining me back in the hosting chair is my good friend Ajit Tripathi, also known as Blockchain Chain Yoda, yes, Chain Yoda, and Jason Henrichs, my regular co-host. Jace, welcome. All right. Joining us today on the show is a company that you're hearing a lot about right now. This is a company called NYDIG. Now, if you are not familiar with them, they are a financial services organization in the crypto space in the US, getting a lot of attention right now. Joining us from the team at NYDIG is the head of bank solutions, Patrick Sells. Recently left Quantic Bank to pursue crypto full-time. Patrick, welcome.
Thank you, Brett. Good to be on with you guys.
Yep. And Zhao, who is the president of NYDIG and the co-founder of StoneRidge. Yan, welcome to Breaking Banks.
Thank you so much for having me on.
How long have you been with the NYDIG folks?
I've been with NYDIG since about December. Before that, though, I've been with StoneRidge since the beginning of our founding, which is in 2012.
Great. Fantastic. You guys are growing very rapidly at the moment. Patrick, you recently made the move from Quantic. Quantic's a pretty progressive, FI in the States comparative to many others. What made you go all in on the Bitcoin stuff, dude?
It's a great question. But and that probably really dovetails into my own personal story with Bitcoin. I think we all have a personal story in terms of coming to understand it. And really part of my move into the banking world a couple years ago was around the belief that Bitcoin and banking could and should coexist. So, I've always been deeply interested in emerging technologies and finance in particular. And so there was just a couple of factors that took place. One, I'd gotten to know NYDIG while at Quantic and really impressed by their approach to the market and what they help us accomplish. And then, I think the regulations in 2020 began to change to allow for a lot of innovation here, and just felt like Bitcoin was something that the banking sector could uniquely unlock, Brett, in terms of the trust and the accessibility, and realize it's where my passion lied. And I wanted to go all in and help make it something that every person can more easily access, and banks, fintechs, et cetera.
Now, NYDIG is obviously a regulated financial services company in the US, but one of the things that is a recent move in the United States, apart from obviously PayPal and Square Cash getting into trading or buy sell of Bitcoin in particular, but crypto custody is a fairly new regulatory structure or regulatory allowance that the SEC and others, and the CFPB and the Fed have made in the US. So tell us about the scope of NYDIG's activity when it comes to crypto and Bitcoin in the US specifically.
Well, I will answer that from the world of banks. That's where I'm really focused, and then Yin can talk about that a bit more broader. But you're right. I think the regulations have allowed for banks to act as a custodian of crypto, and I think there's probably a reason for that, and probably a few reasons. And I think one is Bitcoin is new and it's emerging, and kind of what is it and how do we do it in a safe and sound way? It's clearly something that a lot of Americans have an interest in. And, I think we see with, to your point, PayPal and Square moving into the space, like 20% of PayPal's US users would buy and sell through them in the first couple of months. That's staggering. And I think it points to this recognition that Americans want to be into Bitcoin and crypto at some level. And to the degree that trusted, regulated financial institutions can play a role in that, it's probably going to create a safer and better system for everyone. And so that's exactly one of the things that NYDIG's focused on, is helping banks have that type of capability, as well as embedding it into other products. Take, for example, a savings account where you could get paid interest in the form of Bitcoin, or have the option to, or a credit card where you could earn Bitcoin rewards instead of cash back. And now you can get an exposure to Bitcoin in a way that's never really existed before. And I think that's powerful. And that's part of the role that banks can play in helping educate and expose consumers. Yen?
No, I love the idea of look, the most useless thing you could do right now is have a credit card with airline miles, right? In the middle of the pandemic. So if you could have a airline, if you could have a credit card with Bitcoin as your rewards, wow, that's pretty cool. That's pretty cool. Yeah.
So
Yeah, go ahead, Ajit.
Patrick, I have a couple of questions, right?
Well, we were going to ask Jan for her perspective on NYDIG first, I think,
okay.
just on anything that Patrick missed.
Yeah, sure. So Patrick definitely hit on the highlights of our bank solutions and platform solutions group. Maybe just to give you a little bit sort of overall context, I want to just spend a minute on some of the other businesses that we have in the platform that supports everything. We really have three main businesses. The first is what Patrick mentioned, bank solutions, which is part of overall platform solutions, which provides white label integrations to partners like banks or fintech companies so that they can seamlessly provide embedded Bitcoin products and services to their end clients. We're incredibly excited about this. I think access and ease of access through trusted financial institutions is crucial. We also have a market solutions business, which really facilitates liquidity, trading, financing, hedging for us and others, and investor solutions, which helps institutional investors buy Bitcoin directly or via private funds that we have. And so underlying all of that, though, exactly as you mentioned, we do have a suite of platform services that allows us to serve all of this: custody, execution, financing, derivatives, AML, KYC, regulatory compliance, data, research, all of that feeds into all of our capabilities.
I know, Ajit, you've got a question, but just before we get to that, would you guys agree more broadly that Bitcoin has moved away from being a payment, a value exchange mechanism, or a payment network largely, to more of the fact that it's almost a digital asset class now, in terms of what people are looking for Bitcoin to achieve for them is long-term asset growth rather than using it to pay for stuff like a pizza, right?
Yeah, so I think there's a lot of interesting things going on with Lightning Network and others, and even within Bitcoin of how to do payments within Bitcoin. But I agree that, at least for me personally, I think that as less important in its value, and much more important to its value is the store value.
Exactly.
And people call it digital gold. We think it is in a lot of ways better than gold in terms of its absolutely limited quantity, in terms of its much easier transferability. So we agree with you there.
I heard this previously, but I don't know if you've heard this one, but someone estimated there's only 6 Olympic-sized swimming pools of gold on the planet. That's a pretty good quote. But
one of the things, though, Brett, an interesting stat is when we think about money and how hard or soft it is, right? How easy is it to be increased the supply or not? So gold today is produced or increased at a rate of about 1.6% annually. whereas Bitcoin's already down to 1.3%. And by the nature of Bitcoin, right, it will become asymptotic to zero.
Scarcity is key to this. So, Ajit,
Yeah.
I'll hand off to you, dude.
Definitely. So I have a few questions. I've been talking to banks about Bitcoin and Ethereum and other cryptocurrencies since 2015. And back in 2015, when you went to banks and said, "Hey guys, you should look into this," you rarely got a polite response. Let's put it mildly, right? Now it's quite, we've come a long way, and we have banks and even institutions like Mass Mutual, traditionally quite conservative, coming into Bitcoin. And what made Mass Mutual come to you?
Sure, I can spend a minute at that. So we have, in the specific case of Mass Mutual, we do have a broader strategic relationship with Mass Mutual. You've seen they've also invested in our last fundraising round for NYDIG, and we work with them on a number of initiatives. But I think aside from strategic partners of ours, Mass Mutual has, you're exactly right, extraordinarily high standards across the board for their diligence. And the reason they came to us, I think, it relates to our origin story, really, is why, how did NYDIG come about? We started 3 years ago, and we've been building our business ever since, even though we only recently became public. And the origin story is we were big Bitcoin believers, and we wanted it for our own corporate treasury as early as 2016, 2017. And we said, all right, well, let's go look for vendors who can help us buy it, security, and regulatory compliant way. Let's find somebody who can help us custody it and do all the audit and accounting that's required. We are a very regulated financial services institution in New York, so we needed the highest standards across all of those aspects, and we couldn't find anyone. And so rather than saying, you know what, this is not important enough, we said this is important enough. We should build the capabilities for ourselves. And once we built it for ourselves and use it for ourselves, and we still use it for ourselves, let's let other people in our situation use it as well. So I think Patrick said one of the things that's really differentiated about us is we started as a financial services company. So we have all the financial knowledge and the compliance infrastructure, but also we have the highest level of regulatory awareness as well. We got a New York BIT license, limited purpose trust. Our head of regulatory affairs is the guy who created the BIT license, Ben Lasky. We spent a lot of time talking to regulators about the space and about other things. So I think that separates us from people who approach it from a technology first and technology only sort of perspective.
Well, yeah, and I'm very curious about that because in some ways your approach is almost the antithesis of what you hear a lot of crypto enthusiasts talk about, which is, part of the push of crypto is take everything out of the financial system and the deregulation and this whole distribution go out of the system. But you actually leaned into it, which is very different as a strategy. And I'm curious, what has that resulted in? You've talked a little bit about the compliance piece. What else have you had to build in and around this solution as it relates to leaning into actually working with mainstream financial services and banks?
Sure. I can let Patrick talk about some of the work we did with Quantic.
Yeah. Well, and I think, Jason, you bring up a really interesting point, and I think part of the evolution or the maturity of what we're seeing here. And, one of the things I just want to call out that we've seen in the research that we've done that 80% of Bitcoin holders today in America actually want to custody it at their bank, right? 85% want to buy it through their bank. So there's definitely, I think, part of the crypto world that's like, hey, this should be completely outside and separate and different. And even as far as replacing the monetary system we have today, we very much don't see it that way. We see Bitcoin and crypto as a complement. And I think it's interesting that the vast majority of actual Bitcoin owners want to have the bank's role in it. In terms of what we had to build in order to work with banks and others, one is the leading custody solution that we have, right? If you're a bank, one of the first things that comes to your mind is reputational risk, right? And one of the things, is how does that play into with crypto? And in particular, question is, could it be hacked, right? NYDIG only uses a cold storage offline custody solution, so it can't be hacked. That process is overseen by our auditor, E&Y. It's very secure. We've also had to build a lot of muscles around our APIs. You know, I understand coming from the world of banks that the technology stack you're on may not be that conducive to integrations and working with someone else. And we knew we needed to make that really easy so that you could use it regardless of where you were. And then I think the third, and in one sense, the most important, is customer service. You know, not banks may want to do this, and consumers want banks too, but we understand that once a bank starts to do that, we need to help them be able to service their customers. And so we've done a lot of work with our research arm to provide content and materials and training, and a white labeled call center that we make available for our banks to really help that adoption curve, if you will, while I think the overall industry and the country continues to kind of gain in our awareness of Bitcoin.
Patrick and Jan, I have a question on regulation, right? So if I'm a bank and I'm holding gold on my balance sheet, then the regulators will probably see that as a very safe asset, and my regulatory capital and risk-weighted assets will be fairly low, right? Whereas regulators don't quite see Bitcoin the same way. And, you know, we spoke to Swiss crypto banks, and even in Germany, you know, custody is regulated as a banking service, more or less. But regulatory capital is a material factor. And as long as Bitcoin is going up, that's great. But if you're holding, you know, 1-to-1 reg cap for the amount of Bitcoin you have, it's very hard to make that a profitable operation. What's your perspective on that?
You bring up a great point, and critical to the NYDIG solution is the bank is never touching Bitcoin. You're never buying it. Even in the concept of paying interest in the form of Bitcoin or rewards, the bank only ever operates in US dollars. And the accounting is the way you would have always expected it. NYDIG, think of us as like your mirrored bank, crypto bank, if you will, off balance sheet, separate company. We take the dollars and get the Bitcoin and turn Bitcoin back into dollars and move it back over. And so the bank can offer all of these products without the risk or exposure to Bitcoin itself. And that was key for developing the regulatory framework and architecture that we have powering many different financial institutions today.
Sounds great. And one more question related to that. So regulated global custodians like BNY Mellon and State Street should have caught on to the opportunity by now, you would think. What's taking so long with the traditional mainstream institutions?
Yeah, I will jump in and say that a lot of these large regulated global custodians are interested in Bitcoin and thinking about sub-custodian relationships. So, you know, we're seeing actually a lot of interest and movement there.
I will say, I don't know if you guys have heard this, but I heard from one of the major without giving this away, e-trading platforms in the United States, a household name when it comes to electronic trading. I did hear from them that the number one search term through Q4 and into January is Bitcoin, right? Yeah. This is a platform that currently doesn't offer it, right? So.
Yeah, and that's, I mean, today very focused on banking. As the platform I'm focused on, but Yin mentioned it earlier, the business unit she leads is platform solutions. And so really focused on being able to think of us as almost the Stripe of Bitcoin, if you will, embed that into RIAs, into the world of philanthropy and charity, into fintechs, credit unions, banks. It's really, we're saying, look, there's so many institutions and companies out there that have developed deep relationships. We want to let you keep those relationships and strengthen them and bring you these types of products, because you're right, Brett, that is where the consumer's interest is. And we just want to we're behind the scenes powering it in a compliant way.
Patrick, one more question on that. So why only Bitcoin? CME is going to launch Ethereum futures soon. And, you know, I come from the Ethereum community, so I'm not neutral on this. But hopefully the hedging instruments that are available on Bitcoin today to institutions will be available on Ethereum and other assets in the future as well. So what are your plans in that direction?
So NYDIG supports today a couple of the top cryptocurrencies, though we're very Bitcoin focused. Personally, I take the position of only Bitcoin for two reasons. One, I think in the history of protocols, ultimately there's a dominant one. If we think about the internet today, it's HTTPS. Think about email, it's IMAP and POP3. And so I think, cryptocurrencies is a new type of technology. There's lots of protocols out there. That's how you think of each one of the cryptos, if you will. And so history has told us there'll typically be one. And then on a personal level, and this gets kind of into the philosophical sense of what is money. To me, there has never been a more beautiful type of money than Bitcoin, if you think it from the characteristics. So I like to call it beautiful Bitcoin.
Look, I appreciate that, Patrick, although I think it's fairly clear that the design flaw in Bitcoin is that it can't be used as a means of value exchange because people are hodling it. That's the real problem, right? Jan, you agree?
People are absolutely holding it. I will add the other thing is we are very commercial people as well at NYDIG, and our focus is really driven by the commercial opportunities. And 99% of the conversations we're having right now is about Bitcoin. If that changes, we can support it. We already do support Ethereum.
Sure. Yeah, and there's something to be said for the fact that it establishes credibility for cryptocurrencies generally when Bitcoin is successful and and it becomes a household name and becomes part of people's portfolio. Let's get back to NYDIG a bit more, and I don't know which of you wishes to answer this question, but there's a lot of acquisition activity right now. You guys are talking to a lot of people, a lot of partnerships. I'm very grateful that, Patrick, we've had the opportunity to announce the NYDIG and Move-In partnership recently as well. But what's your thesis there? Is it just, is it acqui-hire? Is it growth? What's behind this clear acquisition drive that NYDIG is pursuing? Obviously, you've got some cash in the coffers as well, but what's the strategic view of these acquisitions?
Sure. So I think if you just take a step back, one of the things that we really, really believe now is that the world is different now than it was 3 years ago or 5 years ago, where maybe 3 or 5 years ago, a lot of people wondering, boy, is Bitcoin going to be a thing? Now, I think we strongly believe, at least, that Bitcoin is a thing and will continue to be increasingly a thing. And we think that in a lot of ways, our competencies across technology, regulation, and financial services places us really well to serve that future and help our partners get better and get better access to Bitcoin. And so when we think about M&A, we're really thinking, one, of course, there's always the acqui-hire strategy. One always needs engineers and product people and salespeople and ops. That's a big one. And we have a very strong culture, and we really want people who are fantastic culture fits. But also, two, absolutely around growth, whether it's adding client segments or whether it's adding capabilities so that we can grow faster and help serve our partners better and faster.
Yeah, and I would add to that, and this says, I think all of us as entrepreneurs, like, this is where you want to be because your customers demand it, right? And that's why the growth is happening, and you see it in the consumer side. Some of those stats I gave you in the industry is wanting to embrace it, and that's a fun place to be. And so it's really all kind of no holds bar. We want to grow, and we want to add great talent that wants to sit and live at the intersection of fintech, banking, and Bitcoin. What a fun place to be.
Excellent. Jason, did you have some thoughts to add in here?
Well, I'm curious as you're thinking about this adoption, to come back briefly. I think we are clearly moving from the innovators to the early adopters phase. What is it going to take, either from an infrastructure, culturally, consumer and customer behavior, to actually get to the early majority?
So I love that you brought this up, because it's actually something I was talking about internally as well. I am solidly not an innovator or an early adopter. I will just admit that. I'm not the first generation iPhone person. I'm like the third, fourth generation iPhone person. So I have a personal experience with this. And I think for me, and a lot of people I speak to, I think one is exactly what we've talked about, sort of ease of access through trusted financial partners. I've talked to a lot of people who said, boy, would love to get some exposure to Bitcoin, but having to research how to buy it and who and is it safe in custody, that's so hard. If you can just make it available through my bank, or I can just get it passively even through swiping my credit card, that's incredible. And I think that then leads to an education and awareness. One of the things that honestly, I was guilty of before spending a lot of time in this space is, unless you're in a space a lot and thinking about it every day, you're just probably 3 to 5 years behind in your knowledge, honestly. And so a lot of people are still thinking, oh boy, the early days, the Silk Road, the hacks, the scary things, and not realizing that there are now solutions like NYDIG with really amazing cold storage and really safe and institutional solutions. And so I think that's the other thing. It just sort of more education, more people are exposed to it, the better.
I saw a great stat on the federal government in the US, the FBI, had captured $1 billion worth of Bitcoin at the time on the Silk Road actions they took, and that Bitcoin most recently, when Bitcoin peaked, was worth 2.6 billion. So there was a suggestion maybe the FBI is now running a hedge fund, yeah.
Well, Tim Draper bought a lot of those Bitcoin, and he is one of the world's first few legit Bitcoin billionaires.
There you go.
As a result of that purchase.
Bitcoin billionaires. That's just what we need. Guys, we've only got a few minutes left. I want to say, let me ask you this question more broadly. Obviously, 2021 is stacking up to be a big year for you guys. So at the end of 2021, where do you think you'll be? Who wants to tackle that?
I'll go first and say something probably more provocative, and then let Yin come in on top. I mean, I think really hope to see the explosion of Bitcoin. And I think what I mean by that is everyone, you heard it from me, from Yin, you guys each as well, has a personal journey with Bitcoin. And just like all new technologies, and everyone's journey is okay to go at their pace and their time. And it can be whatever it is. The key thing is that you start that journey. And so I see our role as one of the leaders in an emerging technology like this is to help make that possible, right? And so today in our investor solutions business, we can help hedge funds or family offices get into sophisticated trading situations. But through bank solutions, we can make Bitcoin something that you don't have to speculate your money. You can earn it in the form of a rewards on a credit card. And that's okay wherever you are. And so I think as a technologist, as an entrepreneur, what I personally really hope is that NYDIG has significantly, with our partners, advanced that ability for people to feel comfortable wherever they are to start that journey in terms of understanding what is Bitcoin and what role can it have in your life.
Couldn't have said it better myself.
Awesome.
And no COVID.
And no COVID. Yeah, absolutely. Well, guys, this has been phenomenal information. It sounds like you guys are on a tear, as they say. You guys are having phenomenal success right now. We're very pleased by that. Very bullish on what you guys are doing. How do people find out about NYDIG and where you guys have your capability deployed?
The easiest would be nydig.com. Also, social media. You can find us on LinkedIn. And for those that are interested, we do have probably one of the industry's best research divisions. And so great place to sign up to get free information whenever there's something happening like a dip or a big run up. We usually are publishing information on that.
Great. Fantastic. The other thing is, what about your personal Twitter IDs, guys? So we can put that up on the Twitter handle when we blog this out.
Of course. Mine's Patrick Sells BTC, playing off my last name there.
My last tweet was in 2011. But it will be a little less relevant.
Okay, no problem. What do you use? LinkedIn, Signal?
More LinkedIn and Signal, but
okay, cool.
we have a mission to get me more on Twitter.
Fantastic. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.